Okay, so welcome everyone to today's webinar. We've got a host of amazing speakers here, all looking at ways that we can kind of increase our profitability, do better on Amazon or do better on e-commerce. So we're gonna kick it off now. So I'm 𝗪𝗪𝗁, I'm your host today, and today I'm going to be discussing what the top 1% of e-com sellers do differently and how you can copy it. So let me just get into it. So you're in the right place if you're selling on Amazon, Shopify, wholesale, or you're doing some kind of DTC. You're juggling multiple purchase orders and shipments, and you're using spreadsheets across multiple channels. So what we really want to look at is getting more control without doing more work, getting more clarity on our costs and our profit margins so that we can, as we're increasing our revenue, we know that we're increasing our profit. So there's a 5-step fix that has really changed everything. Is really step one is tracking your entire purchase order delivery chain in one place, getting a full landed cost view of your SKUs in real time, catching and fixing profit leaks early before they become catastrophic, and four, capturing cost variances. And what I mean by cost variances is just think about yesterday. Maybe you sold 500 units at $1 a piece. Right? So your cost of goods sold is $500. And then say today you sold another 500 units, but you received a new shipment and that cost was 90 cents. So today your cost of goods sold is say $450. So that's a $50 difference. Now, if you didn't update your cost of goods sold in whatever platform you're using to measure your profitability, or you didn't send it to your accountant to capture the new change in the cost, and you went for 30 days without doing anything, that $50 now becomes $1,500, and over 12 months, that's $18,000, and that's just of one SKU. So capturing variances is very important so that your profit is realized where it should be. And next is allocating freight by volume and reconciling invoices. So next, I'm just going to show you a quick video because I don't think I could say it any better than how it's said right now.
We've all been there. Invoices piling up in your inbox, one after another, day after day. Each one demands to be added to that trusty spreadsheet. Copy, paste, repeat. Hours disappear, mistakes creep in, and still the stack keeps growing. Here's the brutal truth. Spreadsheets weren't built for this. Now you're manually entering all that information onto that spreadsheet, hoping you don't make a mistake. But then comes a shipping bill. You need to break those costs down, figure out the cost per unit to ship. Then you get a customs bill, and you've got to do the same thing again. These costs can make or break your pricing strategy. How do you do that? Well, usually it depends on whether you're doing some kind of magical math, just splitting cost by units. But what you really should be doing is calculating it based on cubic meters of a container and the exact tariff rates of each product you import. Now, you're spending more time buried in another spreadsheet to try and figure it out, but then you still need to do the same thing with your tariff costs. By now, you're regretting the spreadsheet rabbit hole you got yourself into, wishing you had stuck your head in the sand like an ostrich. You are thinking about all the other things you could be doing, but then you run the comparison P&L, and suddenly you see a $26,000 difference. What if there was a better way, a quicker, more accurate way? Let's have a look. We've made tracking costs incredibly easy. First, we have invoice matching, find the purchase order, pair it to the invoice, and now we have all the line items with the invoices stored right next to it. No more diving into the never-ending Google inbox abyss. Next, we add the shipping invoice, and calculating costs is as easy as pairing it to the shipping plan. Figuring out freight and customs costs is done with 2 clicks. Just select the shipping and customs option. Next, enter the shipping cost and then the customs tariff costs. From there, it automatically calculates everything based on cubic meters and the tariff rates we've input. Not only does this save you time, the accuracy it provides is next level. That gives us clean, organized line items for shipping, everything calculated correctly based on the container, CBM, the tariff rates, and the actual rates you...
Okay, so you can see there it was a little bit blurry, but the point of the matter is the complexity that spreadsheets bring to your business. You've got multiple invoices that come in, especially now with Q4 coming up. There's probably a lot of orders that have been placed, and there's a little bit of chaos in your organization. What's coming in, what's gone out, understanding that flow. Sometimes, especially with a split shipment, you've ordered 5,000 units, you're running low, and you need to send 500 by air. How are you tracking that shipment for one, and how are you allocating the cost? Because of course that's going to be a more expensive cost per unit. So understanding the profitability on those products is important, not only for growth, scalable growth, but profitable growth at the end. So the way that we want to track everything is in one place in an organized way, and Google Sheets and Excel or however you're doing it, simply isn't cutting it. So important to have and see your purchase orders, your shipments, your freight, and your documents in a single view. Being able to assign vendors and timelines for costs without the complexity of spreadsheets, because spreadsheets, manual entry equals mistakes. And then also knowing what's arriving and at what cost it is arriving at, because once you know that cost is, can you make it better? That, like that example earlier, that $1 a unit, can I make it 90 cents? Can I make it 87 cents? Can I make it 80 cents? What are the things I can do without sacrificing quality? Next is, tracking every shipment like a hawk. Understanding your lead times, because lead times impact your cash flow conversion cycle. Allocating those freights, especially the duties and tariffs. One of the big issues that we see is the way that tariffs are calculated. Most of the time, for ease, there's a $5,000 customs bill. I ship 5,000 units in a container, and blanket math, $1 a unit for each. And that's also can impact, that SKU by SKU profitability. Next is tracking the reimbursements, shared container costs, and other miscellaneous costs as well. Seeing production from port to delivery in one view. Calculating that true landed unit cost. Visibility equals control, and control equals margin. So if your costs are wrong, everything on your P&L is trickled down, which ends up as an incorrect net line on your P&L. So understanding that freight and duty, brokerage costs, allocating the share cost by SKU, catching errors before they hit your books, and then viewing the true cost of each shipment, and then not guesstimating your cost of goods sold. Capturing that cost variance, like I explained before. Every time a shipment is received, a new shipment is received. Oftentimes, obviously, your factory costs are going to be the same. Maybe they go up. Maybe you can organize a better rate if you did more volume, but most of the time, your factory costs are pretty standard. It's the shipping costs, your customs costs, and maybe there's some local freight that adds some variation to your costs. And those are the numbers that need to be captured before they hit your P&L. And then allocating by volume and reconciling automatically. So you simply can't split a $6,000 bill evenly across 14 SKUs, because invariably, think about if you're shipping a container and you're shipping pianos and box of matches. To ship a piano and to ship a box of matches is going to be very, very different. So understanding the carton dimensions of what you're shipping and allocating those costs proportionally based on volume is really how you win the game of cost and understanding your landed unit costs. So just like the example I showed before, oftentimes why it matters is, a 10 cents variance could equal $18,000 a year in lost profit or misallocated profit, because that profit is, will be there. It's just sitting in your cost of goods sold versus on your net profit line. So here you can see just a comparison between if I just did blanket math on a container versus if I actually split it by cubic meters of a container and I actually allocated it correctly based off the correct tariff percentages that product or material is getting charged. So you can see the difference in unit costs. So, just doing blanket math, it's a 91-cent difference compared to, almost like a 4-cent difference to a 22-cent difference. So, these variances add up over time. So instead of doing the lazy math that kills your margin, it's doing it correctly to capture those costs and increase your profitability. So just a quick re-step on the 5-step profit plan is: 1, track everything in one place, control every purchase order and make smarter, faster decisions, calculate your true landed cost automatically without spreadsheets, catching cost variances instantly, and then allocating freight and duties on actual volume and tariff rates, not just on blanket math. Okay, so if you want to watch a full on-demand replay, I go into a lot more in depth on on how we can eliminate spreadsheets and how you can make this automatic so that you can spend more time on what you should be doing, which is driving revenue, and at the same time making sure that your profit is there to take home at the end of the day. So that's it for me. I'm going to hand this over to Shane.
Awesome, Mark. Thank you so much, man. I really appreciate it. And thank you once again. I think obviously we talk about costs. That's going to be pretty important when it comes down to figuring out if you're profitable or not, right? It's important to be able to get that down to the penny. And it's kind of crazy when you see what that looks like. And, you know, the difference in profitability can be pennies and it can make so much more money in the end. So it's kind of crazy. So great. What I was going to do is I'm going to go ahead and tell you guys what we've got going on in regards to, my name is Shane Barker. I'm the owner of TraceVue. So what we're going to talk about today is, I mean, obviously profitability is extremely important, right? You have to know your numbers. And then great, once you know your numbers and you're on Amazon, guess what? The next thing you want to take a look at is your reviews, right? I think reviews are going to be extremely, extremely important. And on Amazon, we built out an awesome software. And what our goal is today is we're going to talk about obviously what the 1% does. We're actually going to show you guys how to do this on your own. So you guys can do it on your own. And then if not, we'll always be there to help. So once again, my name is Shane Barker. I'm the owner of TraceVue. I've been in the digital space for 25 years. Jumped to the Amazon space about 5 years ago. Used to teach at UCLA, have a nice little history there. But the good part is once again, we're going to talk about reviews today. So let's go ahead and jump into it. We're going to talk about how you can claim what you can do with those reviews and how you can protect your brand by using TraceVue. Great. So what we're going to talk about is some of the Amazon sellers challenges, right? So as you can see here, that 1 in 3 reviews may be, we've seen over the years that there may be policy violations there. So what we file on and what you guys should file on are reviews that clearly violate Amazon's guidelines. So the guidelines, we'll talk about those here in a little bit. The guidelines are going to be anything that violates Amazon's rules, right? So the own rules that they have, mentioning cussing, pricing, those type of things. Anything FBA related is also something we take a look at. So there's obviously, if we're talking about 1 in 3 reviews potentially having a policy violation, really what we're looking at there is that doesn't mean that they're blatantly against Amazon's guidelines. There can be severities to it, right? If somebody uses the F word, is very different than if they use the word crap, right? Those are in violation, but one is going to be more egregious than the others. Also, negative reviews hurt rankings. Trust in sales, they also increase your PPC cost. Reviews, we all know that, as a consumer, when you go and you look at something that's on Amazon, you're going to go and you look at the reviews instantly. That's just the first thing we do, right? Whether we whether we know that or not, subconsciously, that's what we're doing. And then obviously manual reporting is going to be slow, inconsistent, and very frustrating because there's a lot of different things that you can do that you're not doing the right way that Amazon will make it so they just ignore you. And so we'll kind of talk about some of the things you can do to get around that. So what's not allowed in reviews, right? So let's talk about this. So our thing is we don't just go after reviews, and you shouldn't go after reviews that you just don't like, right? Sometimes there's constructive criticism in reviews that I think can be very valuable. Really what we're looking at is we want to go after reviews that go against Amazon's own rules or their own guidelines. And so we're looking at, anything that's seller order or shipping feedback, comments about pricing or availability, content, written in unsupported languages. We got repetitive language, private information, profanity, hate speech, sexual content, external links. You get my point. There's a lot of different things that Amazon deems as something they don't want on the platform. So you can have a review that is legit, but once again, if they mention the exact pricing of the item, that is going to be something that obviously you can't do, and that should be removed on the platform. Next, we're going to talk about, let's take a look at this. So what this is going to be reviews that actually violate Amazon's guidelines. So I'm just put some of these up here. Some of these are a little funny, a little facetious, right? But these are reviews that are legit that actually are on the Amazon platform. This one is How to Win Friends and Influence People, obviously by Dale Carnegie. An awesome book. This poor Chapman, he said, hasn't worked. Everyone still hates me. Well, there we go. Now, I'm not saying this is a review that necessarily violates Amazon's guidelines. I don't think it's an exact review of the book. Usually Amazon likes reviews that are going to talk about the book, right? Hey, I bought the book. I read it. It took me 3 months. It did help me with this. It didn't help me with that. Talking about the pros and cons. This right here saying that everybody still hates me. Obviously, I think the person was being a little facetious, but there's 78 people that found this helpful or maybe just found it humorous, I would say. This is another review, right? Does this violate Amazon's terms of service? So to sum it up, so what this is a hair, to take the hairs off your body, right? And so it says, to sum it up, Meat removed my hair, dignity, and self-respect. Now, okay, maybe it did. I don't think it took away too much of self-respect from this person, but my point of telling you this or showing this to you is these are the types of reviews that are on Amazon. Our goal is to get these removed. This is probably one of my most favorite. Beds should look like beds. I ordered this when I was drunk because I thought it was a giant ice cream sandwich. It's not. It's a bed, not the $150 ice cream sandwich I wanted. Now, these are actual reviews that are actually on Amazon. I'm sure some of them have been removed after we've talked about them. But my point of this is these are the types of reviews that come on there. Now, once again, is this in violation of Amazon's guidelines? It is, because it mentions the pricing, $150, right? I think they're being facetious. I think they're trying to be funny, but this is something that we would file on because it mentions the exact pricing of this bed, or if you've been drinking the biggest ice cream sandwich that you've ever seen in your life. Great. Now let's talk about the cost of these types of negative reviews. Like, what happens here? So every 0.1 drop in star ratings impacts conversions, right? So I think we all know that. There's a huge drop if you go from a 4.3 to a 4.2. That can drop you anywhere from 10 to 50% of your sales because of that 0.1 drop. So that's something to take a look at. Also, lost buy box opportunities, decreased organic rankings, and then a long-term impact on brand reputation and buyers, right? So if you have a low score, people just aren't going to buy your product. Your PPC costs are going to go up. Your social proof isn't going to be there. There's a lot of different things. And obviously, it's very difficult if you have an issue, a customer has an issue with something, trying to reach out to them is virtually impossible. You can't do that on the platform anymore. So what are some of the things you can do? I can tell you that, Amazon's first thing, what they'll tell you is to click the report button. Awesome. Not a bad way to go, but I don't think we've ever removed a review just by clicking the report button. That is that first step. Obviously, Amazon, what they're going to be looking to do is they're looking to require that you have some kind of proof, right? So what you want to do is when you're building a case with Amazon, you want to make sure you have clear evidence that obviously that something's going on here. So what you want to do is clear, compelling evidence that once again will show why this is in violation. And once again, you want to make sure that you're referencing the guidelines, talk about, once again, what the issue is with the review, how it violates their guidelines, and the reason why it's confusing to consumers. Also, seller central tickets get ignored and get closed. We're very, very familiar with this because when something gets closed and Amazon doesn't do anything, we just file another case. And the reason why we feel comfortable with that, and the reason why you should, is because you're actually filing on reviews that should be removed, that are against Amazon's own rules. So somebody used the F word in a review, guess what? That review should be removed, and everybody at Amazon should agree with that. It's just, you got to find the right person that is going to be able to get that removed for you. And then wasting time chasing single reviews versus running your business, you got to figure out how do you want to spend your time, right? If you can figure this out, I'm going to give you actually the keys to the castle here where you can actually do it on your own. If that makes sense and you got a VA, you got somebody that can do that and then go knock out those reviews, that really is the goal for me today for this webinar, is to show you guys how to do that. We only have 10 minutes, so I can't go into all the details, but I can at least give you the tools to be able to make those better decisions and figure out what you need to do. So I will tell you before we get into how you guys can do it on your own, TraceVue's, we've removed over 14,000 reviews for our Amazon customers. Once again, we only focus on the Amazon space, and this is what we do. We don't do consulting in Amazon. We don't do anything else. We only focus on reviews, and we have over 600 brands that we work with. And once again, between our team, we have about 30 years of experience there. Now, enough about TraceVue's. Let's talk about how you guys can do this on your own. So we have the ultimate guide to removing negative reviews. Great. You guys can take a look at this. You can download it. Here goes the link down below. We can also provide you guys with obviously the presentation. What this is going to talk to you is going to give you proven tactics to delete malicious or policy breaking reviews, step-by-step instructions to report and remove them, and then methods to boost and protect your star rating, and then tips to safeguard your brand's credibility. And once again, you can obviously go to the website, how to detect and remove negative reviews. It's a free ebook. And then also the other tool that we created for you guys is an Amazon review checker. So this is a free tool. What you can do is you can go in, you can put in your ASIN, you click unfair reviews. What it'll do, you go and you verify your email address, and then we will send you a report on the most recent reviews that you guys should be filing on that violate Amazon's guidelines. So I've given you a PDF that shows you how to do it, the email addresses to use, all the fun stuff, how to facilitate that. And then I've also given you a tool that you can go in and check your ASINs and figure out which ones are that violate Amazon's guidelines. So when you get that report, it'll clearly say, hey, these are in violation of the guidelines and exactly which ones are in violation of. So we've really given you guys the keys to the castle. If you look at this and you say, hey, Shane, I'll download the ebook. If you're like me, you download it, you'll read it, you're going to facilitate it, you're going to spend all your time. I would rather spend my time on growth, on other things than reviews, because it can be a very tedious process. So if you guys just want us to take on the headache, you guys can click this QR code. What that will do is obviously you'll set up a time to chat with me. I do all my own demos because obviously I like to talk with sellers and get to know what their problems and figure out how we can improve the software. So you have the tools to do it on your own. Awesome. Go try that. If things don't work out, you can always schedule a demo for us today. And thank you guys so much for taking the time. Appreciate you.
Thanks, Shane. That was awesome. I mean, really, I love the, because I always think about like the right brain and the left brain. The right brain, all the creative, fun things, and the left brain, the profit stuff, like the reviews, inventory management, all the stuff that we just don't want to do, that we just like leave a little box on the side of the desk. So I really encourage people to give Shane a shot, because if this is something that you can take off your plate and spend more time on sourcing products and PPC and all the stuff that drives revenue, well, you have professionals handling the tedious things of selling online. So I really encourage everyone to book a call. Awesome. So next we have Leah from 𝗲𝗪𝗁.
Hi, thanks, Mark. So I'm 𝗲𝗪𝘁 from 𝗲𝗪𝗁. We help sellers who have been suspended or have had their ASIN suspended. We help them get reinstated, which means that I have seen all of the bad things that you hope never happens to your account. But we also help people manage their account health so they can avoid the bad things and not have to deal with an account or ASIN suspension. And one of the least understood areas of policy that I find sellers pretty regularly unknowingly break the rules on is ASIN variations. It's something that is actually pretty easy, but sellers like to make it more complicated than it actually is. So Amazon considers variations very literally. So if they say that the variation theme for your product is going to be color, or should I say you say that the ASIN variation theme is going to be color, then your products within that theme can only vary by color. So if you find yourself having to put additional information into the color attribute to make the listing make sense with your different variations, so maybe you have to put in like red 12-pack and green 2-pack in order to make it make sense, then those variations are violating Amazon's policies, which a lot of sellers don't really think is going to cause that much of a problem. They think that maybe the listings will just get separated into separate listings and that'll be the end of it. But actually what we see a lot of is Amazon suspending the entire account because you've misused variations. And what we've seen in the last year or so is that rather than just suspending the account and asking you for a plan of action where you'll explain how it'll never happen again, they're actually suspending the whole account and only giving you a dispute path. So you then have to prove to them that you didn't violate their policies, which isn't really possible to do if you did in fact violate their policies. So the first thing is make sure that you are very literal in your interpretation of Amazon's variation themes. You cannot go off of what other sellers are doing, which is the conversation that every seller I talk to about this likes to tell me. Like, everybody else is doing their variations like this. Look, Amazon is doing their variations like this. And yes, most sellers are misusing variations. Amazon also misuses variations. The difference is that Amazon is not going to get suspended for breaking the rules. So you need to make sure when you are making your listings that you are making variations that are not violating their policies. And I think the reason that so many sellers have issues with this is that they're looking at their variations after they have made their products. Whereas the sellers who are looking at this from a data-driven point of view, they're actually looking at the available variations within Amazon system before they start making the variation products. So if you go into Seller Central, you download a flat file for your specific category, that flat file is going to tell you what variation themes are available for that specific category. And so the data-driven, the smart sellers, they're looking at that and they're making their products based on what variation themes are available and what people want within their products. So if your category only has color and size variations, you are making variations with color and size only. If your category only has quantity variations, which some of them do, then you are only making variations with quantity. They're not forcing variations that don't actually fit within Amazon's policy in order to merchandise it together the way they want to. And so when sellers are doing a Shopify first, or even just not really thinking about it and creating products before they list it on Amazon, they're running into that issue because they want to have their products merchandised together on one detail page. And so they're trying to make it make sense when it doesn't make sense. And so I understand the urge to have your reviews merge. I understand the urge to put all of your traffic to one detail page. Like, it makes sense. But you're not only violating Amazon's policies, you're also making a confusing buyer experience on your detail page. So if people don't understand what they're buying, one, they're probably going to buy less. Two, you're going to end up getting a lot more returns than you would have otherwise. And three, you're probably going to get bad reviews, as Shane was just talking about, because people don't really understand what it is that they're purchasing from you. So I highly recommend using flat files just in general on Amazon, because another thing that people who are data-driven are already starting to look at is Amazon's AI. And the more information that you can put into a flat file of all of the different product attributes on Amazon, the better Amazon's AI is going to be at putting your products in front of the right customers. And the flat file has a lot more fields than the information in Seller Central. So you want to make sure that you are downloading that flat file for your specific product category, and you need to make sure that you are filling in as many of those attributes as possible to make it easier for people to find your product and easier for Amazon's AI to rank it and make it easier for search. And then finally, again with AI, if you're using incorrect variations, I've seen this happen a number of times in the last 6 months or so. If you're using incorrect variations, like say you're using style, but the product actually varies by quantity, what you'll find is that Amazon's AI gets confused. And so that's when you'll start seeing products getting put together that don't necessarily belong together by Amazon's teams. That's when you see products getting separated that shouldn't be separated. And that's also where you see information with like the Q&A section that Amazon's AI generates. That's where you start to see misinformation showing there, because people are putting wrong information into attributes in order to get their variations to merge together. So while the urge to create these variations in order to get as many people to see your products in one place and to have all of the reviews merged together seems like it would actually be increasing sales and increasing your search rank, actually can work against you and decrease the visibility of your products and make it harder for people to buy your products, because that information is getting incorrectly parsed by Amazon's AI. So even if you don't want to think about the account health, which most people don't want to think about, and even if you don't want to think about what this could get you suspended, think about how it will affect your optimization. If you're making the listing confusing to people, you're also making it confusing to AI, which means that Amazon is not going to show your listings to the right people when they are ready to buy your products.
Okay, awesome. Thanks, Leah. That's awesome. Next we have Shawshank. Is that correctly?
Yeah, you did.
Okay, awesome. Thank you.
Let me just share my screen. Sent in a request to you.
Got it.
Awesome.
Actually, I think Shane. Okay, got it. There we go.
My screen's visible.
Yep.
Awesome. So, hey, hi everyone. My name is Shashank. I'm the co-founder of Xhipment.com. We're a digital freight forwarder, primarily helping US-based sellers to import into the country across multiple geographies, both air and ocean mode. Primarily, I spent my career at Amazon, where I was leading product and tech, building supply chain solutions for the Amazon global selling team. Did that for like close to 7+ years before moving on to starting Xhipment. We're like a bunch of ex-Amazonians who've come together and built this over the last 3 years. Cool. I'll just straight up jump into my presentation. The topic that I would like to discuss is, of course, quite relevant. How do we be tariff smart in 2025, given how dynamic this situation or scenario has been through this particular year? A little bit about us. As I said, we're founded by Amazon alumni. We have close to 1,600+ customers, primarily Amazon sellers across multiple geographies. We are a full stack carrier, leveraging technology to deliver a more efficient and cost competitive service to our customers. We have multiple licenses across geographies to allow us to operate as an ocean and an air carrier. The services that we offer are door-to-door ocean shipping across multiple geos like China, Vietnam, Thailand, Southeast Asia, India, into the US, UK, Europe, Middle East. We offer export, import within services. We've built a full stack platform that allows our customers to have freight intelligence at a click of a button. We also offer warehousing as a service in the US. I just wanted to use this slide to baseline all our understanding on what does a tariff actually mean. For example, if there's a shipment of say $10,000 that is getting imported into the country, based on the HTS code, the duty that's applicable is 5%, and that's applied to that particular product imported from anywhere in the world. However, in the new world that we live in, there are tariffs that are specific to origin countries that are used to import the goods into the US, for example. So if the tariff for that particular country is 10%, the total cost that a particular importer would have to pay would be the duty percent into the invoice value, which is 10,000 into 5%, plus tariff into the invoice value, which is 10% of 10,000. So in effect, the importer now has to pay close to $1,500 as duty and tariffs versus the erstwhile rates of $500. The current status, at least when it comes to imports into the US, India, of course, is tariffed at 50% at this point in time. Hopefully that gets resolved soon. UK is at 10%, Europe's at 15%, China is at 30-odd%, Vietnam is at 20%. If shipments are transshipped from China via Vietnam, there's an additional 40% that's levied for all these imports. Coming to like the topic of discussion on how do we navigate the new world, the new scenario at this point in time. Of course, at this point in time, based on the tariff situation, we need to abide by the laws that have been laid forth. But as a top 1% seller, this crisis is definitely an opportunity to not let go of and plan for the next 6 to 18 months. What I'm seeing on the ground as we interact with our customers who are $7 to $8 million figure sellers on Amazon.com is one, that they've started diversifying their sourcing, not just dependent on a particular region. Of course, they cannot do much for this particular peak. That's already done and dusted. But as they look at the next 6 to 18 months, I'm actively seeing sellers are diversifying and moving away from just one particular country from a sourcing perspective, and they're moving to multiple geographies based on the categories. One tactical aspect that what we've also seen sellers use at this point in time is store their goods in bonded facilities. We have those facilities on the west and the east coast of the country. Bonded facilities typically allow you to store goods without having to pay custom duties, and only when you import the goods into the country for sale is when you got to pay the duty. In fact, one of our customers who imports primarily from China, especially 2 months back, stored at least 2 to 3 containers in our East Coast facility, waited, and by that time the issue with China resolved. The tariffs were put on hold, and then they imported the goods into the country, saving them to the tune of $150,000 of additional duties. The other strategy that what I'm seeing on the ground that sellers are adopting is to just reevaluate the SKU mix. Gone are the days that you can sell a commodity with lower margins and expect to scale on Amazon. Sellers now are primarily working on SKUs and ASINs where they're adding value to the particular product that is helping them to command a particular premium as well. So that helps them to have higher margins, have the ability to also absorb unpredictable shocks that may arise due to force majeure events that happen. The fourth point that I'd want to specifically talk about is diversification. A lot of sellers have typically been focused on a particular region, which is the US. But as we see sellers are now moving across multiple geographies, especially UK, Europe, Australia, Canada, as well as an active strategy, not just a afterthought. we are also Amazon partnered carriers integrated in Seller Central US across multiple geographies. So we're seeing how sellers who are just Amazon focused are also now building their own brands, expanding to Canada, UK, Europe, Australia, as far as Middle East as well, Amazon.ae. And in my perspective, I think that's a very smart strategy, especially if you're looking at the next 12 to 24 months. While I understand that US is one of the largest consumer markets, $30 trillion GDP, it is prudent to look at other geographies, which of course combined have significant amount of consumption power and capability that can help you as a seller to diversify and actively build resilience in your supply chain and diversification. Just showing the slide where we're seeing that multiple geographies do offer a very significant platform for someone to build and scale their brand as well. In conclusion, my recommendation would be with respect to compliance: do not underdeclare, do not fall for grey hat tactics. Make sure you're asking your freight forwarder with respect to how they're clearing the shipments. When shipments get imported, do they offer you a entry summary? Make sure that you're looking at the draft entry summary before approving it. There are a lot of freight forwarders or a lot of anecdotes that I've heard where carriers may just offer you an all-in rate, and you may not even ask the question that, hey, how are you managing duties? And that's a slippery slope. And we've realized that now CBP is very active in terms of identifying bad actors. Even though you may not be you may not be responsible directly, it may come back negatively. So please make sure that you're on top of how you're declaring your goods while importing. As I mentioned, make sure that you're identifying a couple of regions where you feel your product will have a fit, experiment, launch. Look at it as a long-term strategy. Keep adding new lanes, diversify over the next 12 to 24 months. Choose the right freight forwarder. As I said, I think at Xhipment, we believe in transparency. We offer an end-to-end service. We make sure that we follow the process of getting custom duty entry summaries approved by our sellers or importers before we file it with the CBP. Make sure you're asking all the right questions. And yeah, I think the fourth is linked to the second point on make sure that you're looking at your ASINs and your selection a little bit more deeply, questioning yourself whether are you really selling a commodity, or can you build, does your brand allow you to command a premium? Does your product allow you to command a premium? What value additions can you bring into your product which will help you to absorb these unnatural shocks that may come in? So yeah, that's my recommendation. And here's my email. Feel free to, and my phone number. Feel free to reach out to me in case you're looking to import your shipments from the geos that I spoke of. Happy to support you end to end. And yeah, thanks so much for the opportunity, Mark.
Great, thank you very much. Yeah, I mean, tariffs are such a huge component in nowadays, and it's not something that can be ignored. And it's just another thing that smart sellers do is they give these things to someone else to do, and they don't try to do everything themselves. So again, highly recommend everyone here that these are all professionals in what they do, and it's all stuff that at the end of the day you shouldn't be doing anyway. You should be focusing on your business, not in the deep darks of reviews and tariffs and listing removals and all that kind of stuff. So but anyway, so next we got FBA help, and we got Alexi. Thanks Rolf.
Thank you. I'm sharing the presentation.
Yep, okay, we can see it.
Okay, thanks. So my name is Alex, and I'm the founder of FBA Help Company. We're based in China, and for the last 10 years, we have been working with Amazon sellers who are based outside China, but who create their products in China and who purchase their products from China, from Chinese manufacturers. So everything that I'm going to speak about in the presentation is about the relations between the Amazon sellers and the Chinese suppliers, and everything is a result of our observation of the most successful of our customers. And for us, the most important criterion for success is the volumes. If we can see that an e-commerce seller is placing orders within several years, and if the volumes are increasing, or if they're stable for a few years, we consider such a customer to be successful. So first, we start with the communication pattern that most of the successful of our customers prefer to use. They prefer to have direct communication with the supplier. However, there are companies which offer product sourcing services, supplier search services, so they can even handle orders on somebody's behalf. They still the successful e-com sellers can still use the services of such customers when they're on the stage of a preliminary investigation, when they are looking for suppliers, when they want to have a comparative analysis of like what suppliers are available on the market, when they don't want to spend time on sending the same questions to different suppliers, they can outsource this kind of thing. But when it comes to daily operational activities, to placing the order, especially when it comes to customization of the order, they prefer to switch to direct communication. This well, part of the reason behind that might be the fact that the successful sellers are usually passionate about their product, and if they find a supplier who shares the passion, they make up a good team. Next, understanding the business model of supplier and the margin structure of a supplier. Let me elaborate a little bit on this one. So a supplier can be a factory, or it can be a full cycle factory, or an assembly line, or a distributor of a factory, or distributor of a group of factories. It can be a trading company. All of these entities, they can be a good supplier as long as they add value into the project. And understanding what kind of business we're talking to is important to speak the same language with the supplier. And next point is understanding the margin structure of the supplier. It's the same as if we want to be a good salesperson, we need to think about the customers of our customers. The same here. If you want to cooperate with supplier well, we need to think about the suppliers of our supplier. So suppliers definitely buy stuff. They buy raw materials, they buy components, maybe services, or maybe they buy ready goods if they're a trading company. Or sometimes they can buy goods from one company, from one supplier, and then they customize the goods with other supplier and sell it to the customer. So when they pay their bills, part of their cost for them is the value-added tax. So they pay the VAT when they pay to their suppliers. And Chinese government, they support the export activities. So when a supplier officially exports the goods selling to an Amazon seller, he can apply for an export tax refund. And this export tax refund can constitute a substantial proportion of the margin of a supplier. So knowing this might help us to negotiate better with a supplier. And in some cases, the export tax refund is the only margin of a supplier, because some of the suppliers, they adopt a business model when they don't actually make profit on selling, but they only make profit on this tax rebates. So it's very useful to know if the supplier is actually using this or not. We can ask him directly, or we can take a look at the export declaration and have it translated by Google Translate. And then if the name of the exporter in the export declaration is the same as the name of the supplier to whom we paid for the goods, so most likely the supplier is using this tax refund, and the amount can be from 6 to 13% of the price of goods that we are paying for the goods. Next, we come into bargaining. So let's say we're on the first stage of communication with the supplier, and as most of the suppliers in China confess, on this stage they get the same kind of requests, the same kind of arguments. Usually the arguments are like, I'm going to order 100 pieces just to test the niche, and then 2 months later maybe I order the whole container or several containers. So please give me the lowest possible prices, and then quite aggressive bargaining starts to take place. And suppliers get it all the time. And as a matter of fact, most of the requests, they don't go further from this stage. Most of the requests just end up in the status of the request. And for a supplier, it can be something like a red flag. So we can see that some of our customers, they prefer to differentiate themselves on this stage, and they are okay to allow a supplier to maybe earn a few $100s on selling samples, or enjoy maybe higher margin on a small first order. But then when the big business comes, when they really start to place big orders, they're in a more advantageous position to bargain and to ask for higher discounts, because by that time the supplier is already considering them as a VIP customer, regardless of the amount of the volume of the first order, because the supplier already enjoyed his first successful business case. He already made his income with a good margin. So if later, if suppliers earn more overall, they can sacrifice their margin. And if this balance is kept, it can create the basis for healthy relations with the supplier. And last but not the least, timing. We can see that the most successful e-commerce sellers, they are strategic in planning their supply chain. So on this slide, we have the 4 main holidays, and we also added end of quarter period. So when we pay to the supplier, usually we pay the deposit 30 or 40%, and the supplier tells us the lead time, 2 weeks, 1 month, couple of months, few days. So we can always estimate when the goods will be ready. Now, if we imagine that the goods are ready to be picked up before the Chinese New Year, everything is congested, everyone is busy, and all the vehicles are overloaded, and the bosses of the company are already in their hometown for holidays, so no one can really take a decision. And what is important, the shipping costs are much higher. So it's preferable to plan the supply chain to avoid our goods being ready for pickup during these peak periods. 4 main holidays plus the end of quarter. And here is the summary. So first, about the contract, direct contract is preferable. Wise bargaining, not over bargaining on small orders. Understanding the business model of a supplier and the structure of his margin, and understanding the fact if the supplier is using the export tax refund option, and right timing for the finished orders. Thank you, and I hope somebody learned something new today.
Thanks, Alexei. That was great. Awesome. And then we have Raj from NetRush.
Great, thanks, Mark. Let me share my screen if that worked. Let me know if that worked out.
Yep.
Great. So I'm Raj from NetRush. NetRush is about 20 years old. We actually started as a seller, one of the largest sellers on Amazon. Today, we help brands. I would describe ourselves certainly as an agency. We help brands grow and sustainably grow and endure in an increasingly changing commercial environment. Big focus on health and wellness for us. I'm the chief strategy officer. What that means is I have my head in the clouds for a lot of the time, but on a good day, that means I might gain a new perspective on something, some of which I want to share with you and hopefully useful. 3 topics I'll cover, something called brand runner, demand, and AI. And I hope to just share something you haven't heard before on each of these. So thanks again, Mark and Sellervue. I love hanging around sellers and those that serve sellers. So let me introduce you to this concept called the brand runner. Brand runner is this role that we've seen emerge in medium and large size brands, kind of that multidisciplinary individual that has to do a little bit of everything. We're seeing more brand runners be born, so to speak, at organizations. But the role of the brand runner is one that has to be a little good at operations, advertising, branding, P&L, creative communications. All of those should look very familiar to you, because really the role of a brand runner has been born out of the seller community. Also believe that some of the CEOs of the future of medium and large size brands will come from the Amazon seller community. If it hasn't happened yet, it won't be long, because brand runners just think differently. So that's why I love being around the seller community. It's actually where the future innovation comes from. And we're seeing this trend at medium and large size businesses of brand runners really dragging their organizations into the future and thinking in unique ways. I won't go through all of these, but they think in ways that we've heard from the panelists as well. I like what Mark said about thinking about look at every shipment like a hawk, or what Shashank said about every product's got to add value. These are things that brand runners think about. And we see brand runners as the ones that perhaps are going to be the customers of those of you selling products, or those that some of you on the call may aspire to be at larger organizations or are serving as today. So keep in mind this role of the brand runner who's really driving e-commerce. So what a brand runner is confronted with today, maybe there's this question about that many have, won't brands as they get larger take more things in-house? I think it's quite the opposite. A brand owner is confronted with lots of capabilities, and this is just an illustrative list, and hopefully I've included many of you on this somewhere here. A brand runner is confronted with this, and even Amazon has services that a brand runner is being offered. In fact, Amazon's transforming as we speak into an organization that offers standalone services, so it sits alongside all the rest of these. So what a brand runner really has to do is think about what pieces do we need? What are these Lego bricks we need to snap together in our organization? So even for those of you in the panel and those of you who offer services, really thinking about how do they advance the strategy or organization. But brand runners really are having to piece together and think about what's here in service of the strategy. So that's one trend we continue to see, and just wanted to highlight that for you so we have a common language here. The other trend, and you've heard many forms of this before, is how demand has changed so much. And there's just a staggering statistic after staggering statistic every day about the meaning of traffic and how traffic is changing. We see it in the way that we work with our partners, particularly in the marketing realm, how consumers may discover products. And you all know what the kind of the modern playbook has turned into, but we certainly, does traffic matter? Are you going to win because you have a better product, or are you going to win because you're getting recommended by the agents, or customer knows to type your brand name into a search bar? So some of this is what brand runners have always known. I would say brands are taking this up very quickly because they are kind of hearing the signals that the world is changing. And I think a lot of you have incorporated this in the way that you think as well. Amazon is no longer a place where brands say, let me put my product up and customers are going to be aware of it. Awareness doesn't happen on Amazon. It's kind of a transaction platform in general. And so awareness happens someplace else. And I'm kind of leading up to just a few comments on AI that'll come at it from a different perspective. If I were to really summarize demand in the way that we talk about demand, if I were to leave you with this, I'd say there are 3 pillars of demand today. Kind of attention. This is kind of, time viewing. You think about TikTok, YouTube, Instagram. So attention is one form of demand. Generative engine optimization, the getting recommended by the robots, whether it's ChatGPT, Gemini, Claude, Perplexity, that is another pillar of demand. And the third one is a very specific thing, DSP, rather sophisticated, advanced form, very specific thing about audience targeting on platforms. Think about Amazon DSP, but these are, I'd say, the 3 pillars. And when we talk to brands, we say, we got to make sure we're activating on these 3 pillars. You could actually think about these pillars in the future as really 2. There's going to be entertainment, because even DSP, we're thinking about streaming ads on top of entertainment. And Geo, we're thinking about how agents, and when you put something in a search engine, how are the robots selecting you? So it's really entertainment and agents if you want to compress the whole world of demand into 2 areas. And we increasingly see it go that way. All right, here's what I'm leading up to. I want to leave you with kind of a thought and look at AI in a different way. I see AI as a very human thing. And, we're hearing a lot about the power of AI, and even in our field here collectively, e-commerce, we spent a lot of time the last 5 years talking about measurement and attribution and data and increasingly complex ways to slice and dice data. If I were to back up a little bit, I would say that what's interesting is that language is not a feature of AI. It's the foundation of the current wave of AI innovation. I think that's what's getting lost in the current conversation. Language is the foundation. So the real breakthrough of AI is that it runs on language, which is the most natural human interface we have. It doesn't necessarily run on numbers, right? Of course, underneath it all, there are perhaps numbers, but it really runs on language. And language is inherently human. It carries context. It carries nuance and stories that no other medium can, which is why the modern playbook really gets boosted by AI. I'm using Mary Ruth's as an example here. We don't work with that brand, but creators work with language, creators drive customers that are using language, brands, and there happened to be a great picture of the 𝗪𝗏 leadership team, which they proudly displayed on Facebook, which they should, because they're really optimizing in this way. They're also using language. They're kind of democratizing language, because them and many other brands, so that more parts of the organization can ask natural language questions about, in new ways, who's my customer, what do they want, how do I have a conversation with my customer digitally. You can even think about these arrows going the other way around as well. So language is really at the root of AI. And we've thought about AI, and even in our field, again, e-commerce, there's a school of thought that the promise of AI is about taking trillions of data points and AI and machine learning and to execute thousands of optimizations and drive this across thousands of products. That's a very mathematical view. I would say, though, that's like bringing an increasingly large calculator to what is essentially a plumbing and connectivity problem. What brands that are doing well, and sellers that are doing well, and all organizations are doing well, when they're connecting awareness and retention and acquisition, and they're doing it in an easy way, and language is giving them a way to do that. So when we think about AI innovation, how to integrate AI into tools and what you're doing, think about the language aspect of all of that. And so you don't want to bring a large calculator to solve a plumbing and connectivity problem, right? So in that way, I just want to introduce you and know that this modern playbook is actually even better with AI as a language model, and think about AI as language. So wanted to leave you with that. Happy to answer questions as we're getting into the Q&A session.
Awesome. Thank you, Raj. All right, so let's just go through couple questions here. We're reaching the top of the hour here, but I know, Aleksey, it's probably 1 a.m. for you, so let's get your questions answered and then you can go to bed. So question, should I deal with suppliers directly or use a sourcing company?
Yeah, as I mentioned in the presentation, as we can see, the successful e-com sellers can do both, but it depends on the stage of their product development. If it requires daily operations, daily communication about complicated things with customization of the product, of course it's advisable to have direct contact with the supplier. It's advisable to come to China or to come to wherever your supplier is at least one time and see him physically and get to know each other personally. It's always better. But of course there are exceptions. There are cases when the sourcing companies can do better. But in most cases, the daily operational routine is done directly, according to what we see.
Okay, awesome. And then Shashank, this one for you. What are some of the common pitfalls sellers find in their current tariff situation?
Yeah. So, as I referred earlier, under declaring, please don't do that. I know that a lot of sellers have realized that, okay, shipment is going to cost me significantly more now because of the tariff. So they tend to under declare directly or indirectly. Maybe their freight forwarder does that because the freight forwarder has given an all-in rate to the seller. So please be mindful of that. Make sure that as a seller, you're asking for the draft entry summary from your forwarder before they file the duties with the customs. Make sure that you're at least questioning and validating. We also had a scenario where a particular customer had given a particular HTS code, but their broker ended up using some other HTS code, which forced them to add like a tariff on top of the duties. So I think that's one of the common pitfall that at least I've seen and I've observed. So I'd recommend that sellers are asking and validating this particular question as they clear goods into the US. The second pitfall, of course, is make sure that you're looking at your margins before you ship out your goods. The tariffs are real. There is no way around it at this point in time. Like I said, you may have a strategy for 12 to 24 months to diversify and improve your sourcing costs, but make sure that you're fully aware of your margin structures, knowing what you're shipping, as I said earlier, right, a manufacturer or a factory owner selling directly has a significant amount of margin depth to absorb certain costs versus a reseller or a trader that may not have that that power to absorb these shocks. So make sure that you're fully aware, asking all the right questions, doing your math before you ship out the goods while you're importing it into the US.
Okay, awesome, thanks. And then Leah, what are the biggest red flags that make a variation non-compliant?
So there's a number, like I mentioned when I was speaking earlier, if you have to put more than what the actual attribute is into the attribute in order for your variation to make sense, that's a red flag. But also, if you're putting newer versions of a product as a variation, that's one that Amazon catches pretty quickly. And then if it looks different, if you have to make the listing different from the rest of the variations other than the one little variation attribute, then that's a red flag to Amazon that these products shouldn't be in a variation relationship.
Okay, awesome. Thanks, Leah. And then Shane, this one's for you. I think we might know the answer, but how much can one bad review really affect revenue? And do you have real life examples?
Yeah, so I mean, it really depends on where you're at, right? And on where your reviews are at, the star rating. I mean, as I mentioned earlier, if you go from a 4.3 to 4.2, we've had clients that signed up with us because they hit a 4.2 and they lost anywhere from 10 to 50% of their sales. So that's a big one because you lose that half a star. The star rating, right? So you go from a 4, visual 4 to a 4, from the 4.5. So we've seen huge changes there. I mean, it depends on category competition. There's a lot of things. We do have real life, and we actually, if you go to the website and you click down, there's actually a thing that we have video testimonials from probably about 15 of our customers. So those are all real live videos that people said, we kind of said, hey, what was your success with Trace Shoes and why did you use us and what have the successes been? So we have quite a few, I say case studies, but live testimonials, video testimonials from paying clients that have had some great results that either dropped down in the BSR or, had something that happened where they got attacked and we were able to clean that up and clear them up for Prime Day or Christmas or whenever the money was coming in. So yeah, we definitely have plenty of case studies there. And once again, we're just excited about helping people.
Yeah, awesome. Awesome. Well, thanks everyone. I think we just crossed over the hour mark here. Really appreciate everyone not only joining, but especially to our presenters here. We've had some really awesome information that only works if you implement it. It's great listening, but you've got to do something to be a little more efficient, to be a little more profitable. And yeah, even if you increased your revenue by just increased your profit by 1%, that's a lot you can take home and a lot you can put in your bank account. So appreciate everyone. Thanks for tuning in. And we'll send the replay shortly. Thanks, everyone.